want to get your thoughts on whether this debate is going to be reignited, the 50 and the 25, because we're going to get new jobs data on October the 4th, if I'm not mistaken, so early October. Could that actually reignite the discussion on whether we're going to see the Fed cutting by 50 basis points in the meeting after?
It could do, depending on what the shape of that payrolls report looks like. But in our view, that we should still get a payrolls print and an unemployment reading that is still consistent with acting in 25 basis point increments, because we think that 50 basis points sends the wrong signal to markets. It might signal that the Fed thinks actually there's something more sinister going on in the economy and that we ought to be worried. I think actually from a labour market perspective, what's going to be more interesting is the October labour market release, because as you were just talking about at the beginning of the segment, we've got, of course, the risk of a government shutdown. Yeah. If that persists down to the 12th of the month, then we obviously have the impact on payrolls. But also as well, we've got the risk of the port workers strike as well. And that's going to create a lot of uncertainty and really muddy the waters in the labour market release when so much emphasis is being put on that by the market.
It seems that we are shifting a little bit in terms of what's the big focus for the Fed. With, we're seeing inflation easing, so inflation is a little bit put to the side, just a tad. What would you highlight as the key thing to monitor to understand what the Fed is going to do between now and the end of the year?
That's a really good question, and it's something we've been debating at Schroders. I think what we're putting the most emphasis on is on the payrolls, because on the household survey right now, there seems to be this dichotomy between what we're actually seeing in terms of the holistic conditions in the labour market and what's actually going on under the hood of the household survey. So I think the payrolls is a more reliable guide. And on that front, if we see some really weak numbers, I think that is what will guide the Fed in its decisions in terms of whether or not it needs to cut rates more aggressively or stick to a kind of careful and methodical path, which is our view at Schroders.